Me, you can say a good morning. If you can hear me, you can say a good morning so that we can start off. Good morning, everybody. Today is a wonderful Friday. It's a holiday, and I know some of you to be here. You've done a sacrifice for you to be here. So, karibuni sana. Karibuni sana. Yes, good morning. I wanted to see the holidays called what? Okay, someone can type what is the name of the holiday for today. So we say happy holidays to all of us, but to our Muslim brothers. Asanteni sana. You can share the link to a friend. Just share the link to a friend. Tell them that we are online, we are on board, so that they can be able to join us. Okay, so Jamal has told us what is the meaning of it. What it is. So karibuni sana. All right. Okay. Today we have a very interesting topic. You've never done this topic before. About understanding audit, especially this is the time that we are doing our audit. So we're going to have a wonderful conversation. Before we continue to allow your friend to come in, I want to ask a question. Is this the first time for you to be here? If it is a first time, you can say a yes. If this is your first time, you can say a yes. I would love to see who is your first time to be here. Aita, karibu sana. So if this is your first time, you can say a yes. Moses, karibu sana. If this is your first time, you can say a yes. Emmanuel, oh my goodness, Mokami, karibuni sana. Karibuni sana. I don't know where you have been because we have been doing this webinar for the longest. And I would encourage you to be able to go ahead and you can visit our social media handles. That is RWK Africa, Facebook, LinkedIn, or myself, Dr. Regina Kengore, CPA-K. Follow us, then you always be seeing these webinars. We do 3 webinars in a month, which are free of charge. We have physical trainings that some others we charge. We have master classes that we also conduct, and I'm going to talk about what we do at the tail end after learning. The other question that I would want to ask: where are you watching the webinar from? Where are you? Your location. Kindly share the link to a friend who you know they are going to benefit out of it. So you can tell me where you are. Kiambu, Millicent. Karibu sana. So where are you? I would love to see where you are. Bungoma, Nairobi, karibuni. Let me just see where you are. Kisumu, Velma, karibu sana. Karibu sana. Most welcome. Most welcome. Most welcome. Nairobi, Othaya, Utawala, Nyeri, karibuni sana, karibuni sana. And I know whatever you're going to learn today, you're going to also put it somewhere that you can always consider. Siaya, when you're doing audit. The other thing that I'll share the notes with you. So at the tail end, I'll share the notes with you. and you're going to love the conversation. So let's start off. I know it's your holiday, so karibuni sana. Let's start off. So if you can see my screen, my notes, you can say a yes. If you can see my screen, so that I can be able to proceed. If you can see my screen, say a yes. Questions to ask your auditor. This was before filing tax return. Okay, I can see yeses. Yeah. So let's proceed. Let's proceed. So this is the content for today. I'll talk about the audit process and its importance. And I don't know how many of us have done audit, how many are in progress, how many have not started. So I'll also share the whole audit process. Key questions to ask your auditor, which is the core of what we are learning today. Tax mistakes auditors make. When you don't understand audit, what are those mistakes they will make? And by the way, those mistakes can cost you a lot of tax issues. Then we talk about how to avoid costly tax mistakes, understanding your true tax position, must have documents to prepare and review, that is to prepare for audit and to review, and then tips to maximum deduction and stay compliant. So it's a lot of content to share. And I wish to start off. I'll share the notes with you. So my co-host, you can share the registration link as early as now. So on the registration link, you're going to register. Then from the link, I'll be able to share. These notes with you. So audit process, and it's important. What is audit? An audit is a systematic and independent examination of financial records, operations, or processes of an organization to ensure accuracy, compliance with regulation, and proper management practices. And I don't know how many of us do a proper audit, or we just do audit for tax purposes. An audit is very crucial, especially for an organization, for the organization to be able to understand how it is growing. So I don't know how many of us conduct audit to understand their true position, that you can be able to understand your true position. To be able to understand your true position. So that is one of the key areas, because it's through audit that you're able to understand your profitability, internal control issues, and I'm going to talk about that, the risk areas within the organization, how the organization is growing, how can it grow, the strategies that you've put in as an organization, and how you're doing even implementation. So audit process is very, very crucial, not just for tax reasons, but also to understand the growth of the organization. So the audit process, this is how it happens. So we have the planning stage where we understand the business and identify key areas of risk. We have the field work where we gather evidence through testing, observation, and analysis. And when we talk about field work, it's not just having the trial balances and having the other documentation and watching and verifying, but also there's observation of what is going on within the organization. So for me, I recommend an audit that is on site, where we come to your organization and observe even what you're doing. Through observation, we can be able to make a lot of conclusions and a lot of recommendations. So observation is very critical. Evaluation is assessing the findings and comparing them against the standards or the expectation. So when we evaluate, when we come up with the financial reports, remember we do it comparatively with the last year or a previous year. But also there is your against your expectation or against what you had thought about the whole year. So it's also important to do those analysis. Then there is the reporting documentation conclusion in an audit report, including any discrepancies or recommendations. So for us, we provide a management report that has the observations and risk. So we do those risk assessment, we do the observations, and we do recommendations on all areas of audit, so that you, as the organization, you are able to see on areas of improvement. And at the tail end, there's a section where we do a recommendation. I guess I should be able to show you a management report. Possibly my co-host, you can look for that. I can be able to show you what we provide to our clients so that you can be able to see. Follow up, ensure that corrective actions are implemented. So during the management report, for instance, if we come and describe that your petty cash had problems, we did not find receipts, the signing was not done properly, we cite all the risk, and then we say the management report, and we do a recommendation. This is a process. This should have what happened. At the end there is a space where we do management action, where they are supposed to commit on what they are supposed to do. So we can be able to also do follow-ups, that after 3 months, we can come back and look at those management report issues and see how the organization is able to implement them. Audit processes, the importance of audit, it ensures accuracy, that your financial records are accurate, that you have complete data recording. Most of us, the reason why our organization are having financial issues, liquidity issues, so many issues, is because our operations, our financial records are not correct. So we don't have the correct bookkeeping accounts. We don't keep records. We don't have source documents. At the end of the day, if even today, as I ask you, provide a profit and loss account for the month of May, I'm very sure that not most of you, most organizations will not be able to provide. And when I go to an organization that they cannot be able to provide a management report on a monthly basis or a quarterly basis, then I know there are so many operational issues within the organization. You cannot be able to grow an organization without understanding the numbers on a daily basis. Understanding how much profit you're making, understanding your sales, your expenses, everything, and balancing those out every single day. So this audit ensures accuracy. It promotes transparency, builds trust among the stakeholders through honest reporting, that everybody is on board. If you are making a loss, it's a true loss, and everybody is aware and everybody agrees. If you are making a profit, people, when we talk about the correct position, especially during audit, that the correct financial statements is a document that gives a lot of decision making to the organization, to the other stakeholders. So it is very important to also, it will promote that transparency. Detect errors and fraud. So if there are irregularities, you can be able to understand through audit. So audit is able to uncover that. We go to organizations that they have so many internal control issues, especially if you go somewhere their petty cash is not being maintained, bank reconciliation is not done, stock reconciliation is not done. There are so many issues that are not done then you know that there are errors, there are fraud. And this is something that I would say that most of our organizations are not suffering because we don't have customers or because we are not having a product or a service that our customers need. It's because most of organizations suffer because of operational issues. We are not keeping correct books. We don't have internal controls. There's a lot of fraud and errors within the organization. It improves controls, encourages better internal controls and risk management. So when we go to an organization and we find, for instance, there are no stock records or stock reconciliations, depending on the nature of the organization, there are things that should be paramount for that organization. For instance, if I talk about an organization that has a lot of stocks, this could be a wholesale shop. Stocks is what you're selling. It is your key asset. So those stock reconciliations should be done daily. The organizations that are able to count their stocks in the morning and in the evening because of controls. When we talk about that wholesale, the other key element of checking is procurement department, that you're able to procure the correct items at the correct prices, and they actually come to the organization. So what are the controls under procurement? What are the controls under stocks? What are the controls at the point of sale? When we are selling, are we selling in cash or are we selling on credit? And if we sell on credit, are we selling 7 days credit, 30 days, 60 days? And who is following up? So some organization, I'll find an accountant is the one who brings a customer, issues an invoice, does collection. There are so many internal control issues that the organization is not able to understand how the operations are moving. And so depending on the nature of the business, controls are very important, and audit is supposed to help on that. Support compliance, ensure that we adhere to laws, regulations, and standards. So those are importance of audit. And before I move to questions that you can ask an auditor, I would want to pose a challenge, and I want an answer on the chat. How many of you are able to provide a management report, a true position of a management report? Management report will give a profit and loss on a monthly basis. So we are 6th June. So you are able to provide for May. Or some of you say, oh, we've not completed accounts. So you are able to provide for April. I want to see on the chat, how many of us are able to do complete record keeping, that you can be able to provide your organization with a true position on a monthly basis. I would want to hear that before I go to the questions that you can ask your auditor. Most of us, and I don't know how many of us are accountants in our organizations, most of us, because there's nobody to follow up on us, we have so many, like now we are in June. You go to an organization and they tell you that they don't have a complete trial balance for last year, 2024. Yet they have an accounting system. So because there's nobody, the director doesn't know accounts, or there are people that they don't check on your work. So you have so many issues when it comes to bookkeeping. Moses is telling me I do provide management financial report by 7th of every month. Congratulations, Moses. And when I find accountants who are as articulate as Moses, I know that they are headed in the right direction, because most of these organizations that we want to work with, we want to go there and become chief accountant and accounts. We want to look for jobs in them. They do thoroughly. They do thorough bookkeeping. But you in that organization, you don't want to do thorough bookkeeping, yet you're looking for an opportunity to go work in a corporation that they do thorough bookkeeping. You cannot. Why? Because you've not practiced that in your organization. So whatever you're looking for, especially in this big organization, they look at their numbers properly. So if you're not able to provide such reports to your director in your organization, then forget the others. So sometimes when you talk about career growth, is also about becoming that accountant that you want, that chief accountant in your organization today, so that you can be able to attract that tomorrow. So that's the challenge that I'm giving you. So if you're not able to do this, even if there's nobody who is checking on you, you can push yourself. You can push yourself to do proper record keeping and be able to provide a management report. That is a bare minimum every month to your to the management team. So thank you, Moses, for that. Let's go to the questions. Let's go to the questions. So what are the questions to ask your auditor? So I'm imagining we are accountant, we are directors, we are owners of the organization. So this is the questions that you should ask. So divided into 3 areas: during, then we have after the audit. So we have 2, during and after. So during, what are the key risk areas you have identified? So this is a place where they are continuing watching, checking, looking at your accounting system. And by the way, your accounting system, that one I did put somewhere. I should have put your accounting system should be audited. The software that you are using should be audited. And we audit it to check the rights. We check if your documentation have been done correctly, if the ledgers are balancing, if the journals are okay. But mostly when it comes to internal controls is at the levels of rights within each person. Are you able to backdate? Are you able to backdate information or delete information? Or the levels of approval? So there are so many things to check when it comes to our accounting softwares. And is it serving you right? So whatever you require as an organization, is that accounting software serving you right? Or is it having gaps? And are there better accounting software that you can be able to use and maximize your operations? So are there any initial findings or concerns? Stay informed about early observation that might be need addressing. So during the audit process, remember, I recommend on sites where the team is able to also do observations, so they can be able to raise issues even during the process. Issues could be there are issues that are on the books, on the system, also on observations. We'll go somewhere and do observation like the store door is not closed. Somebody can get in and pick what they want and leave. So those are physical observations that someone can be able to make. And we'll put them on the management report. That at the gate, I came in, no soldier asked me where I was going. There was no recording, there was nothing. Those are control issues, and they're very, very important. Have there been any changes in accounting standard that affect us? Make sure your records reflect current standards and practices. There are so many changes that are happening from tax to accounting standards. So we'll be able to also make that information in our internal control environment effective, because internal controls is the core of an audit. So gaining insight into how well internal controls prevent and detect issues. So during the audit, the checking of internal controls from everything, every activity during the organization. There are places where we do even a process audit. And that process audit is supposed to check internal controls. So as I mentioned, for instance, from procurement, what are the internal controls around that? And also observation of what you're doing on a daily basis. Do you have policies and manuals that guide you? So if somebody new comes to the organization, are there policies and manuals that they're able to follow? This is our procedure for procurement. This is a procedure for HR. This is for finance. It's also very, very important to have the policies. But when now the internal control, that is on procurement. When we come to stocks, if you're having stocks within the organization, what are the internal controls around the stock? If you're doing manufacturing, remember there are raw materials that are coming in, going to production, and there's a finished product. So the internal control around all these stocks, how is it being done? Are we having reconciliations and everything? When it comes to now selling, how do we get a customer? How do we vouch if this is a real customer? Because that is also very, very important, especially spaces where you're selling on credit. At what time do we graduate this customer from cash to credit basis? Because sometimes you find that somebody came, bought 2 times something very low or not value, and then they start asking for a credit. And little do you know, when they get the credit, they go. So how do we verify this is a customer? When we sell, how do we do bank reconciliations and confirmations about those payments? If they are credit sales, how are we able to follow up on those payments? And how do we determine that this person should be worth this money, be given such a credit, and the other one another one? So all those issues around that portion. And also for the people within the organization, what controls are they having at every level? If there are returns of goods, they go to the customer, they come back. What are the controls? How do we return them back to the stock? Who verifies? Who approves? How is a credit note raised in the accounting software? So there are so many internal control issues to check and verify. When it also comes to HR, are we having all the people coming to work? Did they come on time? Are they going on leave? Are they doing the work that they were supposed to be doing? Are they meeting their targets? So there are so many internal control issues that should be happening within the organization. Do you need additional information or support from us? So this ensures smooth communication and cooperation. So you're asking the auditor, and it is also very good to find out, are they getting enough cooperation? When they ask a question, is the question being answered on time? After the audit, what are the significant findings and recommendations? Remember, I said beyond the financial statement that we provide, there is a management letter. The financial statement has a profit and loss account. It has the balance sheet. It has a cash flow and also many other notes inside. But there's that management letter that shows the areas of observations and the risk and the recommendations. And we also see that there's a management section where the management should take action on what we found out and commit to make sure that the issues raised are not raised any longer. So how can we strengthen our internal controls? We'll explain it on that management letter, and we're going to have a sitting together to address it and to also see the people responsible on handling the issues raised there. Are there any compliance issues we need to address? On the management letter, we're going to also talk about compliance. This will be on tax, on anything legal, on the licenses that we were not able to check or we were not able to be provided. How do we perform compared to previous audits? It's very, very important. And to track improvement over time. Remember, when we do audit, we do it as a comparative year. There's a previous year and then the coming year. For us, we always check what were the calculations, the actual position for the previous year and the actual position of that year, so that we can find, even when it comes to expenses. For instance, 2023, your expenses, your fuel expense was 10 million. And this year, 2024, your expense is 15 million. We have to determine where the 5 million came from and why was the hike so high. So that explanation is very, very important. Anything, if you find repairs, if you find loans that were over, there's any difference should be able to be explained. And also in the management letter, we can look at that and see how we can do it. Remember, an audit is very, very important because you can be able to actually even make decisions. For instance, if that transport or the fuel or the transport expense is expense for hire, for instance, hire of motor vehicle, you can be able to make a conclusion. If the hire is 5 million in a year, what if we get a loan and buy our own vehicle? How will that help the organization? So it's something very, very important to have a correct, an actual position, which is extremely accurate. What can we do to improve the next year audit? So being proactive about streamlining and enhancing future audits. So we'll mention on areas of improvement or areas where we need to see improvements. And mostly for us, we have an engagement, quarterly engagement, half-year engagement, to just see the management issues and to see if the issues raised have been followed and improvement done. Over time, a span of 2-3 years, you find that the organization is totally okay. The books are kept very well. Everything is able now to align properly because every year there's an improvement that is happening. I want to talk about tax mistakes auditors make. Before I go to that, let me talk about how to avoid costly mistakes. I'll come back to that because that is very key. I would want to really you understand that. How to avoid costly tax mistakes: maintain accurate and organized records. So this is where we have a lot of issues: disorganized, incomplete records. And when you're having a tax issue and you don't have evidence, which are your book records, you find that you might be even losing a lot of. Some of us, our organization, are in losses, but we cannot be able to demonstrate that loss. So we have to keep records of income, expenses, payroll, invoices. And when I talk about records, I always have a list. Today, I didn't have a list of the records that you should be providing. But especially when it comes to our expenses, we expense on our mobile phones and M-Pesa, but we don't keep source documents. Remember, an audit should happen within 5 years of operations. So you find that you've been operating 2-3 years without any issue being raised by KRA. But now your organization is now stable, you're now making a good turnovers. By the time you hit year 5, you're doing 20, 30 million, 50 million a year. And that particular time, you attract an audit. Remember, that audit will not be for 2025, it will be for the other previous year. So it will be like for 5 years. Even the year that you did not have an accountant, you did not have records. And remember that formative year, the year of establishment, is actually the year that you made losses, but you don't have records. So at the end of the period, you find that you get tax assessment because of record keeping. Understand and meet tax deadlines. So there are so many during tax filings. There are days. Like now, we have 6 months to file the audit for January to December periods. And we are in June, and some of us have not even started, which we are going to give you an offer for today so that we can do audits for you. So we always recommend that this should be done early. You can do it, your audit by April, so that you're able to review. There are so many mistakes that happen during audit process. So you're also able to review. When it comes to others, VAT, pay, there's some days to do that, but we always want to do it on the deadline, and we end up making a lot of mistakes. Especially when we are doing the VAT, because we have the pre-filing or the outer population that is happening. You should be able to review that VAT records before the closure of the month. So that's what I recommend. So don't wait until the month is over, then you start looking at it and you're like, oh, I did not have these purchases, was not put. Remember, you only adjust the sales, you don't adjust your purchases. So if you do not check them earlier before the closure of the month, then there's nothing that you can do. So we are now at a position where you have to check them on time. Separate business and personal finance. Don't mix funds for your business and for your personal finance. So you open a separate business account, as if the director is there, they don't mix at all, whether their expenses, their money coming in. The director should be away from the business when it comes to operations. Know your tax obligations. Most of us are operating, but we don't know our tax obligations. So different businesses have different requirements based on their structure and location. So understand taxes which are applicable for you when it comes to sole proprietor, partnership, corporation, and also on terms of turnovers. If you're at 5 million, if you're below, understanding your tax position is very, very important. I've seen some of us do, we don't have pay as you earn, yet we declare salaries expense at the end of the year. So some of these are audit triggers. I also talk about audit triggers, but not today when we talk about tax audits. The other is take advantage of deductions and credits. So if you have expenses, and remember all these expenses should be having documentation, proper documentation. You have the highest recommendation is to get ETIMS receipts on everything, ETIMS receipts on everything, whether it's transport to office supplies to marketing. That is the highest level of compliance. And remember, there was a time 2023 that KRA issued a circular that all our all our expenses and purchases should be ITIMS compliant. We are yet to see how they are going to conduct the 2024 audit review, if they are going to really push on that. So that is the highest. The other is having receipts, just normal receipts, whether for anything, but you should be having a receipt. If it is items that someone did not give you a receipt, like you hired a boda person, they came, you paid them 500 shillings, sign a petty cash. So there's a petty cash being signed for that 500 shillings. So everything should be documented, so that when we have those expenses, then we can be able to do the correct deductions. Stay updated on tax law changes. There are so many changes, like now we are having the finance bill, proposed finance bill for year 2025. I don't know if you checked to see how it's going to affect your industry. Also, there are so many amendments that happened during the year. So many, like now we had amendment in December. There's always, so it is very important for you to stay updated. And we always have tax trends. So we'll be having tax trends next week on Friday, where we handle tax changes, and you can be able to learn. Review all financial statements thoroughly. This is very, very important to be able to understand your true position. So look at your income statement, your balance sheet, everything with your accountant or with your auditor. And this is why I mentioned that you're going to even have a comparative year, that you can be able to see, why did this expense increase? Why did this reduce? What did we do better here? Here, what happened? It is very, very important to always have that conversation. Evaluate deductions and tax credit claimed. So if you claimed deductions, if you did verify if you did installment payment, if you did advance tax, you can claim those tax credits. Is very, very important. Okay. Understand tax liability. So request a breakdown of current taxes owed and any deferred tax liability or asset. So make sure that we are understanding your true tax position. So what is the computation of the tax at this particular month, at this particular year, and have we deferred? How much did we pay for VAT? How much did we pay for pay? It's also very important to evaluate. Did we pay income withholding tax on time? Are there penalties and interest? Remember, right now we are even having an amnesty. Are we having tax arrears? Can we enjoy the amnesty? It's very, very important. Access, compliance, and risk exposure. What is the use the audit to identify any areas where your business is not compliant or at risk of audit. So you find an organization, there was no withholding that was done for instance, for professional services. So you did a legal expense that is $1 million, the whole year came to $1 million or something. You did not do 5%. So for us, we always cite those tax risk areas, which you can be able to understand and be able to fix earlier. So you also find that when we do the VAT analysis, I'm going to show you how, you find that even the VAT, when we do the VAT analysis, that is the 12 months, how you've been doing your VAT. We also check the Z report. The Z report is provided by the ITIMS machine. You find there are discrepancies, that the VAT and the Z is not balanced. We always check for tax risk areas, and we advise you. Update, forecast, and plan ahead. Use insights from the audit to update your tax estimates and cash flow plans. So we do a tax planning position, and we help you to forecast your tax issues. So remember, if you're supposed to be paying an installment tax, how you're supposed to pay your other obligation, whether they are VAT pay, if you are withholding agent, if you've been able to do it properly, or you're having such issues, we do a plan that is help you plan for the other year. So before I go to must-have document to prepare, I would want to go back to something that I had promised. Tax mistakes auditors make, and I really want you to take note of this. And you can ask your question at the chat box. I'll get time to answer your questions. Is it true that if you consistently file your VAT return before 10th, it can be a trigger from KRA? No. No, 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 no. You can file from first, second, third. It's not a trigger at all. Remember, at this point, the system is actually doing pre-filing. It's actually you confirming and saying validate. So there's no much actually information that we are giving it at this particular point. So there's no trigger. Let's talk about tax mistakes auditors make. Failing to carry out a VAT analysis. So they don't do a VAT analysis. And this is something that I would want you to also write on the chat. If you've been able to see such areas and how they affected your tax, or they brought tax issues because of these mistakes. Why do we do the VAT analysis? To see how much you've been, how much sales and purchases that you've done the full year. So if you're VAT registered, we conduct that we check your iTax portal, and from January to December. So from January to December for 12 months, for instance, you did 30 million worth of sales and 25 million worth of purchases. And that information is the information that we are going to use when we are doing the income tax. If you go beyond or lower, that is an audit trigger. So some of the auditors will ask you for a sales ledger and your bank statement, and they use those two documents to do an audit. That will be a trigger. So if you VAT registered, whatever information you provided for VAT, that should form the income tax information. The sales ledger and the bank statement is supposed to seek for reconciliation to match what you filed for VAT. So if the sales ledger has 35 million, for instance, we should be able to find out where the 5 million is coming from. Is it a credit note, or is there under declaration that was not done properly? And if we come to a point where we would want the organization to verify or to declare their sales as 35 million, we have to come back to the VAT return and do that amendment, because those two analyses should be able to balance. I hope that is clear. When we also do the bank reconciliation, and I mentioned that number 3, not carrying out proper bank analysis and reconciliation. So when you share with us the bank, and we do our own analysis, and we find that the banking for that year was 40 million. Remember, the VAT was 30, the sales ledger was 35, the bank statement was 40. We should be able to reconcile all the 3. Because for the 40, and their credit sales that were supposed to be the other year that was paid this year, did the director deposit some money to support the business? So those are some of the questions that we should be able to answer to do a proper reconciliation. Remember, during audit, KRA will request for the sales ledger and they will request for the bank, your banking, so that they can be able to see if they are under declarations that were they are under declarations that were not done. Also, if we have auditors who are here to listen to this, this is one of the critical areas that I find so many doing having issues, especially those ISPAC ones that says they are not so qualified. They always make that mistake, and it is a very critical mistake because you cannot convince KRA that as a company, you did not understand what was going on, what the auditor did. That one you cannot explain. So for instance, your VAT is 30 million and your income tax is 35 million. So the auditor used your sales ledger and they did 35. That 5 million will be charged 16% VAT because it should have been a sale. So that is not something that you can go explain and say, I did not know. Remember, these returns are self-assessment. You sat down, you looked at them, you were on sound mind, and you filed. So regardless if it was you or it was the auditor, that mistake, you have to pay for it. You cannot have an explanation why they don't match. So that is very critical. And also when we also have the banking, when at the end of the year, when KRA is asking for the bank, if they find that the bank now has 40 million, and that additional 10 million you cannot explain where it's coming from, they also do the 16% and do the 30% on any additional money. So I hope that is very correct. I hope you understood, but you can ask a question at the chat. Failing to conduct a pay analysis, similar to VAT. So pay, we look at the pay as you earn, what you have done for 12 months. If you've paid for pay as you earn 3 million, you cannot come at the end of the year when you're doing the audit, you say 5 million. The additional 2 million, you have to explain where it's coming from. So if this 2 million is wages, you should be able to record them on the audit report as wages and have supporting document, because wages is one of the critical areas that KRA checks. So you should be having proper document of that wages. What is that proper document? It is a wages sheet where it should have a name of the person, names, phone numbers, the number of days they worked, the amount, and them signing. They should also be able to sign. And this should be done, if you're paying them on a weekly basis, should be done on a weekly basis and have that file showing all that labor cost. If they did offloading or any other casual job they did, all those proper documentation should be provided. Okay, number 4, overstating balance sheet items to balance it. This is very critical. Most of auditors don't understand that the balance sheet items act as audit triggers. Mostly we concentrate on the profit and loss. So what are these items? For instance, debtors. Debtors are credit sales. And remember also credit sales, they form part of sales. So if during the year 2024, you did sales worth 30 million, the 30 million that we are working with, your sales was 30 million. But when it comes to these sales, is a combination of your cash and credit sales, both of them. When it comes to debtors, on the balance sheet, because it was not balancing, the auditor says we're going to balance this figure with debtors, and your correct debtors are 10 million, so you add to be 30 or 40. So you put your debtors to be 40 million. That will not be able to, that is not balancing out, because during tax audit, KRA will conduct the debtors account. They'll do opening debtors and closing debtors, and they always see the overstating of that debtors. And also when it comes to payables and everything else, even loan statement, some of us use loans to balance the balance sheet items. So when it is not balancing with 10 million, you fix it under loans. During a tax audit, KRA will ask you for loan statement of that money, and you don't have. So all the items that are there, when it comes to assets, we have a movement schedule. Do you have a movement schedule? Do you own those assets? If they are motor vehicle, are they owned by the organization, or are they owned by the director? Have you listed them? So those are items that that will be there, will be asked. If you have land, if you have machineries, are they owned by the organization? Overstating of expenses to reduce on profits, that's number 5. That is the other mistake. So an auditor goes through your books and they determine that you made a huge profit. So our sales is 30 million, remember? And at the end of the month, at the end of the year 2024, you have made a profit of 10 million, for instance. No, let me quote 5 million. Remember, when it comes to our sales and purchases, we have the VAT analysis. Our VAT analysis gave us sales. It also gave us purchases. This is what the purchases that you filed for 12 months. When it comes to cost of goods sold, where we have opening stock and purchases and closing stock, that purchases should be the purchases that you filed for VAT analysis. So if you come back and say that we said our purchases was 25 million, when it comes to the cost of sales, now you say that your purchases was 35 million, you have to explain. On VAT, you gave us 25, but here you're giving us 35 million. Where is the 10 million coming from? So you find that the auditor will not be able to touch your sales and your purchases. So because already that information KRA has it. So what are we going to do? We are going to look at our expenses and overstate our expenses. So if it is fuel costs, which was 5 million, we're gonna say it's 6 million. If it is others, we're gonna add here. And during audit, KRA will request for those receipts and you don't have them. Overstating of stocks to reduce on profit. This is very common. It is very, very common. And it is one of the dangerous positions that, dangerous items that auditors play with. Overstating of the closing stock. So when we overstate the closing stock, for instance, is 10 million. Because now you're having a profit of 5 million and you don't know how to fix it. You come back to the closing stock and say it is 15 million, so that it is able to accommodate that profit of 5 million. Over time, you keep overstating the stock. Remember next year, when you'll be doing the auditor again, you use the opening stock as 15 million. So for the other year, you now overstate it with 5 million. So it comes to 20. Then the other year, in a span of 5-6 years, your stocks is 50 million. Yet your actual stock is 5 million. So at the end of the day, over time, that will raise a question and you'll not be able to handle it. So KRA will ask you for a stock sheet. They can even come do a physical check. And also for you, you'll now be wondering, how will my financial records ever balance with these crazy stocks? The other number 7, not maintaining directors' accounts. Director account. So when we come to the banking, and which is I don't advise where directors do deposit and withdrawals. So directors should be able to be separated from the organization. But somehow director put money, deposits money in the account so that the business is able to run. So they are having financial challenges and director brings 2-3 million to the organization. If you don't maintain that director account, for instance, when we do the bank reconciliations and we find that during that year, the director deposited 3 million, that's why we are coming to the banking being so high. But you don't have director's account in your balance sheet, then the KRA will not be able to accept that money, 3 million, as money that a director input in the organization. So they will turn that money as money the organization received, as sales they received. Possibly they received that sales through the director, then the director deposited in the account, and they're going to charge corporation tax and VAT on that money. Why? Because you don't have director's account in your balance sheet. And you should be having opening balance, the transaction during the year, and the closing balance, which closing balance should go to your balance sheet. Lack of understanding of tax computation. This is another mistake that auditors do. So the iTax portal, when has a space where it does the calculation of tax position. So I wanted to read. So for us, when we are doing audit, we always provide a tax computation sheet, because tax computation is different from what the profit that you find in the organization. So when we are doing that, we have to less depreciation. Then we add back the wear and tear. Then we also check any taxes that have been paid during the year, withholding, advance tax. So we always have that sheet that we are able to tell you how it is done properly. So most auditors don't understand how to do tax computation. So you find that they even you even filed more taxes than you're supposed to be filing. I hope that is okay. So with that, I want to hear a comment. Have I told you something that you've never heard before when it comes to audit and tax? Before I go to the next one. Let me hear a comment. And by the way, if you don't get anything from this, understand those items that I've just explained right now, those will save you so many trouble. So I can see questions at the chat. How do you handle clients who are reluctant to share bank statement for audit purpose, and how to make them understand the impact of their action? So for us, we don't have that challenge for sure. because we tell them that us understanding their bank statement is beneficial for them. If tomorrow they want us to represent them for tax issues, then we have to understand their bankings. We have to. Otherwise, we will not be able to handle their tax issues. So for us, we don't have that challenge. It's allowing the client to understand the necessity of having the bank statement. And also, how much do they trust you? How much do they trust you with that information? If you are a small trader below 5 million threshold, not registered for VAT, but deal with vatable goods, are you supposed to just charge VAT? If so, how do you account for output VAT? So if you're not registered for VAT, don't charge VAT, because you'll not be able to account for it. And I don't know how you also charge, because someone who, if you're charging somebody VAT, they will have to ask you for items invoice. So I don't know how you're doing it. Wait until you're 5 million, or you can still register. You can do voluntary registration. But VAT is very expensive to even be able to do it on a monthly basis. So I always recommend wait until you are at the threshold. Does the purchases of an office block qualify for installment, investment deduction, and at which rate? Charles, so Charles, I would love to give you our number. I would love to hear your question much, much better. I'd want to hear what business you do, how much is the investment of the office block, so that we can be able to advise you. When it comes to investment deductions, capital allowances, they are very good, and they can help your organization reduce on profits even for 10 years and above. But there is an audit that should happen. So this is something that we do, the capital allowances, those deductions, and we share with KRA for them to be able to verify and be able to grant us those deductions. So I want to hear more of it. How do you handle incomplete records from 5 years back, bank statement available, sales from levy records, purchase? Okay, Evans Mutua. I don't know how to go about that. I don't know, are you an accountant or are you practicing? So if you're if you're a company and you have those incomplete records, we have a bookkeeping department that can help you solve that issue. For now, and they can be able to also look at how they can be able to fill the gaps for the previous years. What is the best treatment for directors' drawings for tax purposes? So when directors draws money, what are they doing with that money? Did they draw money for petty cash use, for their personal use? Are there money that they gave the organization as loans? Now they are taking it back. So why are they doing withdrawals? Because those withdrawals can be termed as money, if unexplained, can be termed as money they paid themselves, and it can be charged pay as you earn. Pay as you earn. So if they are petty cash, there are so many ways of handling petty cash than having the director being involved in withdrawing the money. Expound more on wages, please. I have a restaurant and we have staff who are not on contract, but are regular and are paid for the days worked, but at the end of the month. So you can have a recording, their name, ID number, the number of days worked, amount, and they sign. So at the end of the month, let them sign when they are receiving their money, and you can keep it safe. You can keep those wages safe. Remember, they should be earning 24,000 and below. If they are getting to the point of 24,000 and above, then they should do the pay as you earn. And also remember, when it comes to pay as you earn, there are others. There's the housing levy, the SHA, the NSSF, the NITA. So everything should come along. What qualifies a person to say, I'm paying wages and not salary, especially if you happen to new staff provision? Okay. So I've mentioned if they get to the threshold, it doesn't matter if they are 1 month, 1 week. I prefer if they get to the 24,000 threshold, you can term them there as employees. If I pay wages, but at the end of the month, does that mean the person qualified to pay statutory? So it doesn't have any change, whether it's weekly or at the end of the month. The total amount paid what should be able to help us, is what should be able to help us to deal with that. How do you deal with a director who keeps on withdrawing monies from the company for personal use? If there are difference between capital drawings and just normal drawings, nothing, not difference. So those withdrawals should be explained. Otherwise, tell the director that all the money withdrawn should be accounted for. There should be a director's account, as I mentioned, and tell them the implication of pay as you earn. They should be able to pay as you earn on those withdrawals. Could you help understand why companies are placed on special table? Fidelis, that's a very good question. We have an issue with the KRA about special table when it comes to VAT. This is actually, I saw last week, they were lawyers and representing over 5,000 companies went to court to bar KRA from putting organizations in special table. You're put there on special table on VAT irregularities. These irregularities are possibly you are so much on a credit position, you're always on a credit position. The other biggest portion that they mentioned is that you're having invalid invoices. So you kind of having illegal invoices. How do they know yet those invoices auto-populated, the items invoices auto-populated on your VAT? So you did them well, but how do they know? So they have a way to understand those VAT, the VAT. So mostly you find that these are companies that are not doing business, but yet they are issuing invoices. So for us, if you've been in business for quite some time, you know invalid invoices. So a company will open for 2-3 months, they give you invoices, then they close. They don't even file anything. Those are invalid invoices. If they detect that, they're going to you're going to go to special table. If you're having a lot of credit notes, you issue a credit, you cancel. So how you're operating the items also is a determinant. What else have I seen them quote? If you're doing nil return for quite some time, credit position for some time, yeah. So when you're placed on special table, there are documentation they are asking for, and it moves like a normal audit. So it's like a normal audit. And you have to provide those documentation, go through KRA. I've seen it that it can even take you a full entire month for them to be able to reinstate your VAT position. Remember, when you're on special table, you are having your items machine. But even if you generate an invoice, your customer cannot be able to see that invoice on their side. It will not auto-populate. So it's like your business is at hold because your customer cannot be able to use that items invoice. So Fidelis, when you get there, you have to act as quickly as possible for you to go back to your normal operations center. And when you go to KRA, you can ask. They always place the reasons why they put you on your special table on the system. You can ask them what is the reason. I have bought good worth 15,000 in supermarket and the goods relate to business. How can I claim? Does not issue items receipt. Supermarkets issue items receipt. They do, Collins, they do. And if you want to use it for VAT, you give them your PIN. So give the supermarket your PIN. But the supermarket are issuing items invoices. For casual employees, e.g. offloaders, how do you handle their payments? Are they supposed to withhold their payment? No, you're not supposed to withhold. You're supposed to pay them. Casual employee, you're supposed to pay them. I say the threshold is 24. If at 24, you can be able to graduate them to pay as you earn. On special table, can you be placed there if you are a service provider, no income or something, maybe 8 months, but still incur fixed expenses like rent? So you have input but no output for 8 small amounts through like that. Okay. So what happens before they put you on special table? Possibly they will ask you, why are you on credit position? So you should be able to answer that question as quickly as possible before they put you on special table. So it's not wrong to be on a credit position. No, I'm just saying there is a requirement for an explanation that is a correcting explanation. So those are some of your questions. You can keep asking them. Let me go back to tell us something about these letters KRA is sending to us to register for TOT, turnover tax. So KRA has a new department. It's called Small and Micro. It's a department to handle MSMEs, the micros. And I've seen them being very active the last 1 month or 2 months. So if you've been filing and you're not on VAT, they are pushing you to do TOT. So TOT is a turnover tax where you file you're below 5 million, but you are at a turnover of 1 million per year. So previously you did your income tax at 1 million, 2 million, 3 million, 4 million. They will be able to send you that letter to tell you to register for TOT. So you're supposed to file TOT on a monthly basis, 1.5% of your monthly sales. The good side with the turnover tax, it is a final tax. It's a final tax, so you don't file the corporation tax at the end of the year. So if you have that letter, YSMB, you can talk to us. We can help you be compliant. So it's casual laborer who earns less than 24 per month liable for levies, NSSF, and SHA. Yes. So for SHA, NSSF, and housing levy, those ones, they don't have the minimum amount. So as long as they step in your organization, then they should be able to file for those other levies. Where should a new business start? Rachel, I've really talked and you're like, oh, am I getting confused? Rachel, a new business should start from operating, make profits. And when you start making profits, because running a business is not also easy, don't overthink about taxes. you can give your business time to be at a threshold where you can be able now to incorporate taxes as you move along. So you can talk to us, we can advise you. And for me, I always say when a business is starting, start with getting customers, getting your supplies and everything, because that is very critical. Otherwise, when a business is starting, taxes should, as the main part I would mention, Rachel, is bookkeeping. Keep your books properly. That will be the key elements or the key areas when a business is starting. So let's go back. I would want to finish in the next 10 minutes. I would want us to listen to, we have an accounting software that we have developed. It's called My Accurate Books. Software is going to help you with your bookkeeping, and it has wonderful features. It's a local solution that we developed because of seeing so many bookkeeping issues. So I request for about 15 minutes at the tail end before 12 to be able to do that demo. So let's continue. Must have document to prepare and review. So when we are coming for the audit, these are some of the documentation that we want to have. Company registration and legal documents. So always ask for that. Remember, the importance of this is to make sure that the information provided at the KRA portal is the information that you're also having. During the period of time the director changed, another one came in, it's always important to have those changes even on the iTax portal. Financial statement and accounting records. So do you have a trial balance, audited financial records for the last 2 or 3 years? It's very important so that we can be able to do the comparative year. Income statement for the year, balance sheet, cash flow statement, accounting policy document, and we always recommend, if you don't have those policy documents, we can also help you prepare. The importance of having them is you having a policy of how information should be kept on the procedures within the organization, which is very important. Banking, payroll, and cash documents. So balance sheet, bank statement for all the years, for all the business accounts for that year that you are auditing. Cash books and petty cash vouchers, loan agreement, repayment schedule, payroll. We'll check on all this documentation. So it's important to have them. Sales and purchases records. So these are receipts, they are ledgers, they are the invoices that you should be having, credit and debit notes, LPOs or delivery notes, tender documents if you have them, especially for government contracts. So if you come to organization and you tell us you've been operating a government project worth 500, like 100 million, would want to see the contract terms, because even during tax audit, that contract document will be also required. Above the sales and purchases records, we need to see the sales and purchases ledgers. The ledgers are provided by the accounting software that you have. Inventory and fixed assets. So fixed asset register, I don't know how many of us have that. So the movement schedule and the asset register that you're having should have all the assets. These are logbooks, when the item was bought, the value is very important. And depending on the nature of the organization, if the organization has a lot of assets, for instance, a school that has a lot of chairs, desk, beds, it's very important to even do the coding, the assets coding. The barcoding that is put on the asset is very important. So inventory sheet, important. Proof of asset purchase. This is invoices and payment confirmations. Internal controls and corporate governance, internal audit reports, if you've been having them, risk management policies and reports, management for them that say that they do management reports. Would love to see those management reports that you provide on a monthly or quarterly basis. Is important. Board meetings and resolutions, procurement and expense approval policies. So those who guide on how we are doing the audit. So tips to maximize deduction and stay compliant. Keep accurate and complete records. I mentioned that. Deduct all legitimate business expenses. I mentioned. Separate personal and business expenses. Understand and apply tax allowances, capital allowances. Someone talked about investment deductions. So if you're having those, that is a conversation we would love to have. Capital and help you get the capital allowances. Stay current with the tax laws and KRA guidelines. So come and watch the tax trends. File returns on time and work with a tax professional. So for me, I advocate for audit. Let the audit be handled by an auditor who understands tax, so that we can avoid the issues that we had raised before. Key takeaways for the audit for the audit season. The key takeaways: use the audit to understand your financial health. And I've really talked about that. It's not about tax filings, not about KRA requesting for audit. It's about the audit being able to help you understand your financial health. If it doesn't, then it's not important in the first place. It was important just for KRA, but not for you as an organization, which is not good. Clarify risk and compliance issues. By the way, when we also do audit, we also check the tax arrears in the iTax portal and bring them on board for you to be able to see if you can do a payment plan, especially now when we are having the amnesty, so that you can also be able to enjoy the amnesty. Turn findings into action. So when we do the management report and their findings that we found there, their recommendations, we do the action plan. So if there was petty cash issues, what is the action that should happen? If stocks reconciliation was an issue, what should happen? If bank reconciliation was not being done, who is supposed to do it by when? Those actions are very important. And I also told you that we can come back after 3 months to see the implementation process. Ask for forward-looking advice. So we did 2024, and indeed we found out that the financial position of the organization is a loss. What happens for year 2025? It's important to plan and ask, what are the opportunities that we missed? What are the areas that we can improve? How can we make more profits? How can we maximize our opportunities? So those are also very, very important issues that are raised during audit. I hope you've been able to learn. So that's what I had. It was quite insightful and quite a lot. You can register on the chat. I'm going to share the notes with you. Register on the link shared on the chat. I'm going to share the notes with you. And you can go sit down with the management and go through them again, and just see if the audit process that is happening is incorporating everything that I've talked about. So next week on the 18th, we'll be talking about tax trends and KRA updates. I'll be talking about the finance bill, the proposed finance bill 2025, and the progress and other areas. Remember, I've said that KRA always has so many changes. I've mentioned a few of them. Then on 20th, we'll be talking about payee compliance simplified, how to understand pay as you earn. And it's also going to be very insightful. We also have a tax masterclass, taxation masterclass, where you can learn everything about tax. So this will be 14th to 25th July. So we have like a month to go. You can actually start paying. The discount is, we are charging 25. So we have discounted to 22,000 for this particular month. So you can be able to enjoy. So if also you are corporate, you have 3, 4, 5 accountant, we can be able to give you at 20,000. So we have My Accurate Books is a point of sale system and a full accounting software. So my co-host is ready to take you through. So we are also ready to help you with your audit. So you can pick our number, and if you've not been able to file your tax return for 2024, or you have done it and you want to incorporate us as your auditors and your tax consultant, that is our number 0728 897 429. You can pick it. If you've not been able to file, we are going to give you a discount for this month, particularly for this month. And we're also going to guide you on how to be compliant for the year 2025. For me, I love to see organizations that are scaling. So part of the audit that we do is to help you be able to understand your numbers for you to be able to scale your organization. So I'll go back and see questions. Let me see if I can handle a few questions. Waisembi asks, how did they know my salaries are over 1 million? My God. Okay. I don't know. Possibly you did business income. Have you ever filed anything, Waisembi? You should tell us, have you ever filed anything for KRA? Remember, there are so many people who file income tax, even with their own business names, for 1 million, 2 million, 3 million. So they can use that data. They can also do surveillance. I don't know if there's somebody who have come to your business. You said you're doing a restaurant and they ate and they saw you doing a good business. Okay. Do you assist in company incorporation, and how much do you charge? Yes, we do, David. We do that. You can pick our number 0728. We'll help you. We'll help you on that. How do you go about registration for TOT? What are the obligations having registered for it? Can a partnership run a pharmacy that has one employee, only 2 persons register for payee obligation? Yes. Yes, only, even if you register 1 person for payee, there's no problem. So for registration of TOT, Nicholas, you can still talk to us, but it is something that you can do on iTax portal. Similarly to how we do payee obligation, there's no much issue on it, but you can guide you. How can we contact you? I've given the number. I think let me go to the notes again and I give you the number again. That 0728, which is on the chat. Very, very informative session. Thank you, Caro. Make sure that as the organization, there will not be tax issues because auditor made a mistake. How do you charge for audit? Tom, there's a contact there. You can also give us your contact. We can call you. This is amazing. Thank you, Rachel. Okay, thank you. Very insightful. Okay. Being specialty, can I file returns? Yes, you can file for corporation returns. You can file for corporation. The affected obligation is VAT. So the affected obligation is VAT. And remember, even the day that you're going to be removed from special table, if you stay there for 3 months, you are not able to file for those 3 months. They will still charge you 10,000 penalty per month. So Tom, the quicker you work on it, the better. So we are also working with the clients to help them maneuver the special table and for them to be able to be removed as quickly as possible. So also I mentioned they are going to say why they put you there. So make sure that you don't repeat the same mistake because they'll be giving you 2 days, 2 months, 3 months, then they put you again on special table. But I also hope that the case at the court will also change that because so many businesses are being affected by that constant being put at special table. So for the TLT obligation, that is something that I've seen in the last 14 days, actually, KRA has released so many emails. So you can check on your email also. They have requested organizations and businesses to register for TOT. So there's a massive registration requirement to register for TOT that is happening. So with that, I can say asanteni sana. I'm 11 minutes to 12. Kindly hold for those 11 minutes. Pius, you can take over. So I have my colleague Pius to talk about my accurate books and see how you can benefit from it. Remember, we have mentioned here that bookkeeping is one of the most critical parts when it comes to tax savings and tax issues. So I would want you to understand my accurate books. So asanteni sana. Friday, be here. I know today you really tried to be here on a holiday. So I appreciate that you've been able to learn with us. I also think that the topic was very timely and very essential for this period. So if you need to do audit, you can call that number 0728 and I'll talk to you. Asanteni sana. Pius, take over.
Good morning, everyone. Thank you, Dr. Regina. As you have been informed, my name is Pius Mudomi, and I'll be taking you through a quick overview of my accurate books. So my accurate books is basically a POS that includes accounting software that simplifies business operations. So to mention a few of the features that we currently have in the system, we have a POS, we have inventory management, we have payment processing, customer management, employee management, sales reporting, eTeams integration is ongoing. We also have security. Considered you're sharing your data with with other users within the software. We ensure that no data is transmitted without being encrypted. This is an online solution, meaning that it's available on the web. That is, you can use it on your computer via your browser. That is either Google Chrome or Microsoft Edge, depending with your preference. For the browser version, it's accessible at app.myacreditbook.com. And for the other bit, it's also available as a mobile application, available in the Google Play Store, which goes by the name My Accurate Books. So from the interactive session that we have just had with Dr. Regina, we're able to find that every business, for all the business operations, bookkeeping and record keeping that involves transactions, that is payments and recording of sales, it's very essential in the success of any business. So as RWK, an accounting firm, there was need to address the challenges that these businesses face, mainly in the East African market and mostly in Kenya. So to address certain issues, we have had a simple and simple to use and eloquent accounting and POS system, or rather software, that is easy to use, very accessible. You don't have to have a computer to be able to use it. You can just use it on your mobile application. So today I'll be able to just show an overview for the browser or the web version. All these features that are in the web version are also available on the mobile application. So just to mention, because I believe this will be a very short session, we usually hold demos. You can leave your contact and we can organize a one-on-one session and take you fully through all the software or the system from onboarding to adding your clients to making of invoices and sales. The other bit also I'll also like to mention about the software is that it is compatible with the printing of receipts, that is the thermal receipts, for those businesses that are operating on a physical location, or where your customer needs receipts after they have made a sale, after you've made a sale. So it is compatible with thermal printers, as well as you can always share your invoice downloaded as a PDF. There are also reports that we have within the software, which you can also download and as well as export. So I'll take you through an overview. So we have the dashboard. I believe everyone is able to see my screen. So on the dashboard, we have the sales, we have the expenses, purchases, and finally the profit and loss. So this is the overview of how your business is operating, whether you are in loss or you've made any profits. Then we have the data reports and the sales performances. So this is a summary that you can always adjust the dates and be able to get an overview of your business. Then the next item we have on the menu are the items. So for the items, we have a category of services or products. So this also applies to solopreneurs that are just offering their services, and they also invoice their clients who don't have physical products. So we have the items, which either into those two categories. And we also have, you can also bulk import your items through the import button at the top. The other bit we have sales. So under sales, we have the sales, we have the quotations, the receipts, credit notes, and receipt payments. So for the invoices, or rather the sales, we have this view. We have this view. that you can see we have the products, the invoice payments. So a quick overview of how to make an invoice or a sale. We have the customer, you just select the customer. You can also choose to add a new customer if you have not already added a customer. Then for the items, you can also add an item. You can select the item. Then you can also add the items. You can provide description and the rate or the price. So for the receipts, that means the customer has paid on the spot. You just issue a pay now, and this will be able to print a receipt if you're connected to a printer, or you can also send them the receipt via email or WhatsApp. Then for the pay letter, that is the invoice, which means that you will have to provide a payment due and a payment account that will receive the funds for reconciliation. Then we have the credit notes. So this is where you may want, where the customer may be returning the items that you've sold to them, or rather you had invoiced. So the credit notes, this is where you record the items that the customers chose to return to your business for inventory management. Then we have the final one is receive payments. So receive payments is where you record the payments for the invoices. On to the next module, you have the purchases. So we have the purchase orders, which you prepare and issue to your suppliers. Then we have the purchases, these are the purchase orders. Then for the purchases, these are the confirmed purchase orders that your supplier issues when they are delivering the stock to your business. Then we also have the debit notes. Debit notes, these are the items as a business that you choose to return back to the supplier. Then finally, we have the suppliers and the pay purchases, where you record all your purchase payments. Then we have the expenses. These are basically your business expenses. We have the customers. And finally, we have the reports. So for the reports, we have the inventory, where you can always adjust or move stock. So for this part of the inventory, we have a feature, branch management, that is upcoming, that will be able to move stock from one branch to the other. Then we also have the profit and loss, where you are able to get all your summary for the total sales, the cost of goods sold, total expenses, and finally gross and net profit. Then we have the debtors report. These are the people that owe your business money. Then on to the next report, we have a creditors report. A creditors report, this is a report, a summary of the amounts that you owe to the suppliers that provide you with the raw material, the goods that you resell to your customers. Then the other report, we have the sales report. We have the total number of sales, the received amounts, the amount. This report, you can always, for all the reports, you can always toggle a start date, provide a date, as well as an end date, and you'll be able to filter out a summary of the reports or the dates that you need the data for, generated to you, that you can always download and export either as Excel or PDF. These download or export reports is available for all the reports. We also have a report that involves the customer's report. You can always get a list of all the invoices or all the sales that you made to a customer. Then you can also have we also have this other feature. We have the user management, where you can choose which user will be able to access the specific module that you have assigned to them. So we have a user as a user roles such as accountant, admin, and salesperson. You can always add a user or filter out to select which user you want to view a report for, depending on the sales that they have recorded. Those are some of the features that we have. I also like to mention a feature that will be rolled out soon. I'll encourage you to follow our socials to get the update. Also, this feature will be able to help you, or rather with the business management, that you'll be able to separate your business finances from your personal finances, as Dr. Regina had mentioned in the session that we have just had. So this is a wallet feature. It will be available partially on the web, and mostly all the features will be on the mobile application. So you'll be able to make deposits, you'll be able to make withdrawals, you'll also be able to make payments to your employees, either via bulk payments. You'll be able to pay suppliers through the application. That means you will be able to save a few records of your suppliers and make instant payments to them. So the wallet will also be able to accommodate receiving funds from abroad and sending funds to suppliers from abroad if your business has suppliers that are overseas. And you'll be able also to reconcile all your transactions when you receive all your payments via the wallet. Then also there was also a mention of the eTIMs. So the system is on the final stages of implementing the eTIMs. So you'll also be able to generate invoices that are eTIMs ready, minimizing the hassle of having a two system where you are using one for eTIMs, then you're coming back to use the MyAccurate books. So this system is a very simple solution that incorporates all the business needs and challenges as we have been able to identify, solving them and providing a simple and accurate solution that will be able to simplify or streamline the operations. So that's it for the MyAccurate books. Unless you have a question, you can ask them directly on the chat, and I'll be able to assist and guide. So thank you so much. Okay, so for the cost, we have a monthly subscription of 500 Kenya shillings. That is for the starter package, just 500 Kenya shillings per month. And once you sign up, you get a free trial for 1 month. You get to access all the features. So you can just sign up and you'll be able to get a free 1 month trial with all the features. So for the free version, we have features that will not work. Features that will do in the free version include the POS and the invoicing bit. Those will be able to, and the customers will be able to work with. So it's the customers invoices, receipts, and the items. That is for the free version. Events. This part until the branches is complete. Currently, you need to have different accounts, but until the branches module is complete, that's when you can add them for each organization as a branch. Yes, so for the eTIMs integration is ongoing. We're in the final steps with with the e-teams to be fully compatible. Elizabeth, thank you for your question. So for the SACCOs, we can schedule a call and you can be able to explain to us the most of the features, or rather the operations that you require in your case, and we'll be able to advise on that.